Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Checking in on the tech sector, XLK, Apple, and Facebook daily weekly time frame. So the tech sector got a more convincing break over resistance, where we had this middle Bollinger Band resistance rejecting the last few attempts. We also saw a nice spike in volume. That's what the bulls were looking for, as a lot of individual names had a clearly declining volume pattern, and not so clear here on XLK, but very clear that the bull volume did show up on Friday, more so than at any point previously in the week. So we closed over the middle Bollinger Band, and the only resistances we have here are the high of Friday, 56.44, and the all-time high, 57.39. So this bounce is now beginning to play out more significantly. It took a while for the bulls to get their feet under them, so to speak, and we see the low, the lower high, higher low, lower high, trading straight across, and then the bull break finally. So we'll see if the bulls can keep up this momentum into next week. That would obviously help the market overall. And on the weekly time frame, after 2 weeks of pullback, indecision doji, and the indecision goes to the bulls with the follow-through week, where we have our nice green solid week, break of the lower high, and trying to fend off the bearish MACD cross. So Apple is still the weakest name that we are following. And when I say name that we're following, I'm looking at the big names. I'm looking at Google, Amazon, Netflix, Facebook, Apple. And out of those 5, Apple is the weakest, as we are still right at exponential resistance. We did finally close right above it. A little bit of an upper wick of profit taking. Look at the declining volume pattern with the volume spike showing up favoring those bulls. But we have moving average resistances. We have not broken the high of the initial bounce. So just looking at the sector where I just showed us our higher low, lower high tightening pattern and then bull break, we have our high, low, lower high, lower low, lower high, and now just trying to break the lower high pattern. But we have work to do, and we are a lot further behind many individual names in the sector. So Apple on the weekly is pinched here. We have an inside bar. We're pinched between the middle Bollinger Band support of 143.76 and the exponential resistance, which is getting that bear cross and crossing to the downside. So if we see a bear break here, essentially what I see happening in this sector is obviously we got a bull break on Friday. If the bulls keep it up, we're going to be looking to play names like Facebook, which I'll cover in just a moment, which is going to test its all-time high this coming week, and Amazon on the back of its bullish news with Whole Foods. If the sector turns around and the bears take back over, we're going to be looking at the weaker names. That's when we're going to be looking to play Apple. So we want to make sure that we're going with the trend. So if the tech sector is strong overall, we're not looking to go bearish any names. Even though Apple is the weakest, that doesn't mean go bearish Apple. We're going with the direction of the market. So if the market stays bullish, we go with the most bullish names. And if the market starts to pull back and see some weakness, and by the market I'm referring to the tech sector here, if it starts to pull back and we see weakness, then we look to Apple and the weaker names. So we don't want to be trying to play Apple bearish if the tech sector is seeing strength. We always want to be going with the trend. So looking at Facebook on the daily time frame, and that's, I mean, if you've been watching these videos for the past 2 weeks, we've been highlighting every single day how Apple is the weakest and Facebook is the strongest. And it's so very clear in this pattern. There's our high, low, lower high, higher low, higher high, and then just bullish for the past. We were bullish all week on Facebook, and Apple just became bullish a little bit on Friday. So just comparatively, there's no comparison. It's very clear that Facebook is headed to the all-time high. We closed 50 cents below that level, increase in bull volume, bull MACD cross, and Facebook, in my opinion, has a new all-time high coming this coming week. And we'll be looking up at psychological resistances, 156, 157, all the way up to 160. We'll be looking at upper Bollinger Band resistances. Couldn't have a stronger close to end the week for Facebook, and the weekly chart shows that. Held exponential support, fending off the bear MACD cross, and we're right there looking for that new all-time high. So congrats to the Facebook bulls, congrats to the tech bulls, and go with the strongest names in the sector. Don't try and find finding laggards is a viable play many times, but in scenarios like this where we're looking at the sector trying to bounce and we're looking at a clear leader, go with the clear leader. Don't try and play the weakest name because it has the most catching up to do. Sometimes that will pay off, but really just wanting to make things easy for yourself, stick with the names where the moves are working in that direction. So thanks for tuning in. I hope you have a good rest of your weekend, and we will see you Monday.